Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Monday morning, markets are open. Welcome to Modern Investing Techniques, episode 119. It's July 27th, 2026, and I'm Patrick in Vancouver. New week, let's see what opportunities the markets are presenting. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Oil prices dropping nearly 7% on diplomatic progress between the US and Iran gives Canadian energy investors a narrow window to reassess exposure before any rebound from shipping disruptions locks in higher costs. The S&P 500 closed at 7,412 with no change. The Nasdaq Composite fell 0.6% to 24,976. The TSX Composite rose 0.5% to 35,369. Oil prices sank nearly 7%, while world shares gained as mediators reported progress toward US-Iran talks and a possible interim ceasefire. A growing number of brokerages now view the July Fed decision as a close call due to the oil surge and Middle East tensions. The Bank of Canada's next policy announcement remains the key macro anchor for rate-sensitive Canadian portfolios, with markets still pricing limited near-term cuts. Energy names led the downside while AI-linked shares rallied in pre-market trading. Nasdaq Composite sits at 24,976 with a year-to-date gain of 7.49% and since inception gain of 11.63%. The matched window portfolio alpha stands at plus 6.59% across 37 benchmarked trades, while the buy and hold gap versus Nasdaq shows a year-to-date shortfall of 6.85%. That oil move is exactly why today's strategy spotlight focuses on how to trade geopolitical de-escalation without getting caught on the wrong side. Geopolitical de-escalation trades require pairing a confirmed volume spike with a fundamental catalyst before committing capital. Rather than chasing headline relief alone, the approach demands both signals align. Today's nearly 7% oil drop on reported US-Iran negotiation progress illustrates how quickly energy exposure can be repriced when diplomatic signals emerge. Investors can implement this by screening for names showing both a 20-day volume surge and a clear policy or supply catalyst. Wealthsimple or Questrade platform screeners make that search straightforward. The approach has historically worked best during the early stages of tension relief when broader market volatility remains elevated. It carries the risk of false starts if shipping or inventory data later contradicts the headline. Always require the volume confirmation step first to avoid entering on noise. Shipping upheaval already underway suggests the oil sell-off may prove short-lived even after the diplomatic pause, because costly cargo diversions continue regardless of the immediate ceasefire talks. Rule: require closing price confirmation before declaring any catalyst trade complete. Once you have the entry discipline, the next layer is making sure any single position can't hurt the whole book. Let's move into position sizing. Imagine you allocated $1,000 to a single energy name last week when oil spiked on Middle East headlines. Your order filled at the opening print, but the position size left no room for the 7% reversal that followed. The mechanism works through simple arithmetic. A 2% portfolio allocation limits any single loss to roughly $20 on a $1,000 account, even if the stop is hit at 10% below entry. A 10% allocation turns that same 10% drop into a $100 hit that compounds across correlated holdings. Professionals always calculate the maximum acceptable loss in dollar terms first. Then they back into share quantity using the distance to their chosen stop, whether fixed, trailing, or volatility-based. The biggest mistake with position sizing is letting a promising setup dictate allocation instead of the other way around. Instead, always size every new position so that a full stop out equals no more than 1% of total portfolio value. Correlation math adds another layer. When energy names move together on the same geopolitical headline, even properly sized individual stops can still produce a portfolio-level drawdown that exceeds the 1% rule if 3 or 4 holdings trigger simultaneously. The Kelly criterion simplified for retail use suggests betting no more than the edge divided by the odds against. In practice, that means shrinking position size further when volatility spikes above the 20-day average. Trailing stops adjust automatically as price moves in your favor, yet they still require an initial hard stop to define the maximum loss before the trail begins. Portfolio drawdowns become psychologically easier to manage when each position is caped at 1% risk. The investor can review the setup calmly rather than reacting to a single oversized loss. The concrete misconception to avoid is treating every new idea as equally important. Instead, always rank setups by conviction and allocate risk dollars accordingly so that only the highest conviction names receive the full 1% allocation. With sizing rules in place, let's see how that discipline looks in today's practice investment decision. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's pick is none. We are monitoring BBD.B.TO on the TSX in the industrials sector. The strategy is watching for a volume-supported bounce after recent delivery milestone news. The hold period runs Monday through Friday. The catalyst is Bombardier's 200th Challenger 3500 delivery to a high-profile buyer. That signals continued super mid-sized jet momentum amid global business travel recovery. The technical setup shows the stock has not yet closed above the 20-day moving average, with volume exceeding the 20-day average. We are waiting for that confirmation. Geopolitical headlines could pressure industrial cyclicals further. An 8% stop below recent support would cap simulated loss at the position size limit. The target is plus 4% to plus 8% on a confirmed breakout and sustained volume. Confidence level is low because we have a single catalyst without volume confirmation or sector breadth yet. This setup demonstrates the discipline of requiring both a fundamental milestone and confirming volume before entry. It teaches listeners how to wait for alignment rather than chase news. It also highlights sector rotation considerations when energy and tech leadership shifts leave room for industrials to catch up. While we wait for confirmation on Bombardier, here are 2 platform tools that can help surface better setups faster. Wealth Simple Trade Options Chain Viewer displays real-time bid-ask spreads and premium yields for covered calls on Canadian and US stocks directly in the app. It gives intermediate investors an edge by showing annualized yields on existing holdings without needing external calculators. That helps decide whether to write calls during low volatility periods. The tool is available at no extra cost to Wealth Simple Trade clients on the standard tier. Interactive Brokers TWS scanner filters for stocks with analyst rating changes and volume spikes above the 20-day average in a single view. Active traders use it to surface names meeting multiple criteria before the open. That reduces reliance on after-hours news feeds. The scanner is free with any Interactive Brokers account. Before we wrap with the week's smaller stories, here's your quick action item. Shein will struggle to justify a 40 to 50 billion US dollar Hong Kong IPO valuation. Prospectus data showed slowing growth and a sharp profitability decline. Investors are expected to scrutinize the figures closely after the Sunday filing. The company's growth trajectory has already moderated enough to prompt valuation skepticism before trading even begins. Action: avoid adding any pre-IPO exposure or related supply chain names until post-listing volume and pricing stabilize. China memory chip maker CXMT's shares soar in a blockbuster share listing in Shanghai. CXMT opened sharply higher in mainland China's largest recent IPO. That highlights continued domestic semiconductor demand. Shares of the country's largest memory chip maker began trading Monday in a deal described as the biggest initial public offering in recent years. The debut performance underscores investor appetite for domestic technology names, despite broader market caution. Action: Add CXMT-related supply chain ETFs to a watch list, but wait for post-listing volume confirmation before any position. Canadians may be eligible for a piece of this class action involving a drug used to treat depression and schizophrenia. Deadline approaching for claims in the Rex Alti settlement. The multi-million-dollar action covers a drug used for depression and schizophrenia, with a fast-approaching cutoff for eligible Canadian claimants. Action: check eligibility through the claims administrator site this week if you or family members used the medication during the covered period. Gordie Howe Bridge to open to cars today after months of cross-border controversy. The new crossing opens to motorists, potentially easing commercial traffic flows between Ontario and Michigan. The project faced prolonged debate over financial terms before reaching today's milestone. Action: review any cross-border logistics or auto sector holdings for possible volume tailwinds once traffic data appears. Finally, put one of these tools to work right now with today's listener challenge. Open your brokerage platform, pull up the options chain for one industrial name you follow, and note the 30-day at the money call premium. Calculate what that premium would annualize to if repeated every month. Our simulated portfolio sits at plus 6.59% alpha since inception against the Nasdaq's year-to-date gain of 7.49%. Across 37 benchmark trades, the buy and hold gap versus Nasdaq shows a year-to-date shortfall of 6.85%. The AI analysis continues to learn from order flow slippage and macro rotation patterns and adjust accordingly. Before we wrap, watch for how the volume confirmation on BBD.BTO develops through the rest of the week. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network, links in the show notes. This show comes to you from the NARA Network. If you want another sharp daily briefing, Environmental Intelligence has you covered. The Environment and Climate Policy Brief for Canada. All our shows are free at naranetwork.com. Live dashboards, TSLA, SpaceX launches, the investing scoreboard are all at naranetwork.com/data. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?